Welcome, everyone, to another episode of the Stoic Trading Psychology Podcast. This is episode 3, the Stoic approach to trading losses, viewing drawdowns as data, not defeats. Obviously, when you lose a trade, it is a loss. There's no way around that. But you can view that loss in a negative way or in a somewhat of a positive way, about as positive as it can be. Every trader is going to have losses, and what separates the successful from the rest is how they handle them. It's really that simple. Now, I would actually be lying to you guys if I said that I've had a massive loss in my trading career. I have not. For some reason, my entire trading career, right from the start, I've been very, very good with managing risk and never even really risking more than 1%. Have I risked more than 1%? For sure, but that's been later on, years into my trading career. So I haven't had that big loss. So I'll be honest, I don't know what it's like. And the idea of this podcast is to kind of help you guys not make that mistake of risking way too much. And unfortunately, with all of this social media and YouTube and Instagram and all these quote-unquote fake traders, in my opinion, they risk so much, and they're showing you $100,000 trades or $100,000 months. And I'll be honest with you guys, they're probably full of it. I feel like they are my gut feeling is telling me that they are lying, they're faking it. We've seen a pretty big trader as of late get caught faking profits. I'm not going to name names, but you can check out my Instagram, and I made a little video on it there. Just a quick little video. It wasn't anything crazy, but these people fake trading profits, and it makes you think that you can make that much as well. Remember, the S&P 500, the average return of in these indexes is like 8 to 10%, I think they say. So anything 8 to 10% or above is going to be extremely amazing, especially if you're taking hundreds of trades per year. So it's very important to not have that big loss. I'm sure some of you who are listening have had that big loss, and that's fine as long as you've learned from it. And then obviously, you should only be risking 1% per trade max anyways, in my opinion, until you become more successful in your trading. When you start to be profitable, then you can start to risk a little bit more. So yeah, I haven't had that big loss. Hopefully you guys haven't either, but if you did, that's okay. And a problem that I see with a lot of these beginner traders is maybe they don't have that much money. Maybe you don't have that much money, and that's completely fine. So then you save an extra $500 and you deposit that $500. But 10% of, let's just say you make 20% a year. Let's say you have an amazing year and you make 20% trading on $500. That's not a lot of money, and it sucks, but that's reality. But the reality is, you have to make, if you can't make 20% on $500, you're not going to make 20% on $100,000 or $20,000 or $50,000, whatever number you want to think of. So the problem is these beginner traders, they deposit such a small amount of money, like $500, and then they risk like 10% on a trade and try to just grow it into like $15,000, $50,000. And why do they do that? Well, because if you go on YouTube and you go to the biggest trading channels out there, the biggest scumbags, in my opinion, you see so many times $5 into $5,200, or the guy who I was talking about who got caught editing his trading profits. I think it was $100 into $1 million. Do you know how difficult and basically impossible that is to do? It is. I'm just going to say it's impossible. I saw another guy recently as well. He posted on Twitter. Basically, he claimed he had a 45% win rate with a 6.5 to 1 risk to reward. So basically making like 15,000% a year. It's like, the lies are so obvious at this point, but the problem is a lot of these beginner traders, they get confused, and that's why I try to be the voice of reason here on YouTube and in the podcast realm, wherever. I know this podcast is pretty new, but that's why I always encourage you guys to share it with beginner traders. Just share it on your social media. Share it however you can to get real information out there and to help people actually become a profitable trader, not get twisted with the returns they are promised by these gurus. So yeah, to carry on here, every trader is going to experience a drawdown. If your strategy has a 6% win rate, 40% of the time you'll lose. That's not failure, that's just statistics. And with every strategy, especially if you have a larger risk reward, you should be expecting some pretty big drawdowns. And a tip that you can go, just a little bit of a tip, something that I do. If you're building a strategy and you're back testing it, don't just back test the wins and losses. That's like the bare minimum is looking at the wins and losses. Also, write down your max drawdown, right? And then you'll be able to come up with your average drawdown and your max drawdown. So if you back test 300 trades and you have a profitable system, you should also understand your max drawdown. Why is this important to know? It's important to know so that when you experience this in real life, when you're actually trading, if on your 6th loss, you'd be like, okay, this is just maybe your average drawdown is like 4, but then your max drawdown that you've seen when you're backtesting is like 9. So then when you're on your 7th loss in a row, you're not worried. You're not thinking about changing strategies. Trust me, I have been there. I've been there where I've had a system and then I knew the system worked, but I didn't really understand the data of the max drawdown, the average drawdown. And as soon as I was on that 6th loss in a row, I'm like, okay, this isn't working. I got to change systems. And I was wrong. That's why the title of the video the title of the podcast is viewing drawdowns as data, not defeat, right? That's why it's important to understand that data. Life is all about little tips and tricks. I think I've mentioned it before, but just an example. When I was growing up, we didn't really have phones and everything like that. So, I would get rides home from friends. I have a late birthday, so they were driving before I was here in Canada. And one time I left my keys at my buddy's house. He had to drive all the way back. We basically got it to my house. We had to drive all the way back, and he got a speeding ticket on the way home, and that was because of me. So from then on, what I would do is I did have a flip phone at the time, and I never forgot my phone. So I would just store my keys with my phone because I knew I would not forget my phone, and my keys were on top of my phone, so I would remember both. That's just a little trick, a little tip, like a little something that you can do to help you do that. Just the same thing. I've had many friends who struggle with alcohol addiction, and they quit alcohol and they're like, okay, yeah, I'm going to the bar tonight to hang out with my friends. I'm gonna drink some non-alcoholic beers. And it's like, okay, in theory, that's completely fine. It's non-alcoholic. That's perfect. But the issue with that is you're putting yourself in that scenario where you could slip up. And that's what I'm bringing up, these little tips and tricks you can do. A tip in that would be to not go to the bar. And then an even bigger tip is to, if you really want to quit drinking, you can't hang out with your drinking friends anymore. Or if you do, make sure nobody's drinking. So it's just these little tips and tricks, like understanding your max drawdown, your average drawdown, things like that can really, really help you be on the right path and just prevent you from failing and kind of strategy hopping and be like, okay, now I got to do something different. It's important to understand that information. As traders, we need to think of each trade as one roll of the dice in a long series of rolls. The outcome of any single trade does not matter, as long as your edge plays out over many trades. If you don't have an edge, if you haven't back tested it, then this does not apply to you. You have to go and back test and find an edge using the TradingView backtesting platform or whatever you want to do. There's Forex Tester 2, I think it's called, or something like that. So there's many different ways to backtest that, and you should not be trading until you have a backtested strategy, in my opinion. And remember, losses they're not personal failures. Like, it doesn't mean that you personally failed and that you're an idiot. It does not mean that at all. It's just part of the statistical process. And when you let go of the need to be right, you will free yourself to trade with clarity. Trust me, it's easier said than done. I will definitely agree. But you need to detach from the monetary outcome of every trade. You're going to lose. It's something you need to just grasp and understand. And whether you win or lose, the goal is to execute your strategy consistently. 5 losses in a row, you take the exact same setup again for the sixth trade, and eventually the probabilities will be fine in the long run. use the website winrate.io. Go to that website. You type in winrate, www.winrate.io, and there you can enter in put your account size in there. It doesn't really matter, but you can put your account size. I think that's trying to make it as realistic as possible. So let's say you have a $1,000 account, put in $1,000, and then put your average. So this is after you've back tested a strategy, remember. So put your win rate in there. So let's say, I don't know, I'm not even going to give examples, but put your win rate in there, and then put your average risk to reward that you get or that you are looking for. Plug all of those in and put it for, I don't know, however many trades you think you'll be taking per month. Multiply that by 12. So let's say 300 trades. Put that in. From there, it will give you your average return. And then from there, you can scroll down. So make sure you do this right now. Scroll down, and then you can see basically different outcomes you can keep refreshing it too, where maybe you start off with 7 losses in a row, maybe you start off with 3 wins in a row. Remember, winning 3 times in a row can also mess with your psychology. You could be overjoyed, and you might risk more the next time, which is not what you want to do. You want to continue to risk the same, and then maybe the next year you risk more. Remember, guys, you also want to be journaling your setups as well, because maybe you did the back testing, you've come up with a system, you've come up with an edge, and then you're trading it. And that's fine. Maybe you're making 15% a year. That's fantastic. It's absolutely incredible. Do not let these phony trading gurus online mess with your psychology. 15 to 20% a year is amazing. So maybe you're making 15 to 20% a year, but then if you're journaling your trades, however you want to journal your trades, if you're journaling them, maybe there's something you missed in your back test. Maybe you realize, wow, I can actually go for like 4 to 1s instead of 3 to 1s, and I'll actually make maybe an extra 5% a year roughly, right? Everything's kind of rough. Maybe you decided when I'm trading with the trend, it's higher odds, and then that's when I risk 2%, right? If you have that data, then you'll understand. And the losses are data as well. Maybe you look at all your losing trades and like, what did I do wrong? Like, is there something I'm missing, right? I don't know. I can't give you specific examples to what your trading strategy is, but I'm telling you, if you journal your setups, I'll be honest with you guys, I don't really journal my setups anymore at all. I know my system. It works for me. But if you're new, you have to do that, because there's things you might catch that you won't catch if you're not journaling your setups. And when you have an emotional attachment to your profit or your P&L, it only leads to over trading or revenge trading, and that's not part of being a stoic person or a stoic trader. Revenge trading and over trading is how people blow their accounts. And I won't lie, I haven't really over traded because I don't really day trade, but I've definitely revenge traded. I remember there was a time where like I lost like 5 in a row, and I just like pressed buy, and I think I like bought a demand zone, it failed, and then I just shorted thinking like, oh, it's gonna go down now, and I was wrong, and I just lost twice as much as I wanted to. But that's the reality. I revenge traded, and it screwed me over, but I have not done that since. That's the important part. I'm not saying you won't revenge trade. I'm just saying if you revenge trade, make it the last time you ever do that. And before you place a trade, ask yourself, what is the worst case scenario? Just a little personal story in my life. I play hockey on Sundays. It's in a pretty competitive league. I've been playing hockey my entire life. And, I'm not going to lie, I get into some scuffles on the ice every now and then. And I was playing a couple weeks ago. Somebody slashed me in the leg, and I punched him in the face. We kind of got into a little bit of a fight. We both got kicked out of the game. And, I'm a little bit older now. I shouldn't really be doing that. I got things to do. I have a family. I don't really want to be injured, right? And I kind of just let the emotions get the best of me. I won't lie. Although he did slash me right in the knee, like a 2-handed baseball swing. So it was, in my opinion, it was kind of called for, my reaction. However, I should, and what I'm doing now is when I'm on the way to the game, I'm listening to music. It's not that long of a drive, but I'm telling myself, do not get angry out there. Let them slash you, right? Okay, if somebody attacks my teammate and slashes them in the face, I'm gonna respond. That's just who I am. If somebody punches me in the face and starts to just fight me, I'm gonna fight back. But somebody slashes me in the leg, somebody says something, somebody does something that's kind of minor, I'm just not gonna react. That's what I'm telling myself as I drive to the game. I'm not saying it out loud, but I'm consciously thinking it. in the car, I'm thinking, what's the worst case scenario? I'm thinking specific scenarios, like go to the net, drive to the net, I accidentally hit the goalie with my pad, some guy punches me in the face, I just kind of skate away, or I don't get involved. I'm playing these scenarios out in my head to prevent me from getting kicked out of the game or suspended, because I'm paying to be a player in this league. It's a waste of money. It's a waste of time on a Sunday night, right? So as I'm on my way to the rink, as I'm getting on the ice, I'm thinking of these things to remind myself this could happen, right? It happened so quick that that little fight I had, that happened in all a matter of 10 seconds. Like, it happened, like where he slashed me. 5 seconds later, we're punching each other on the ground. So it happens so quick, and that's why you have to constantly remind yourself beforehand what the worst case scenario is. And it's the same thing with trading. Before you place a trade, tell yourself, I could lose this trade, and that will be fine. I will learn something. Come up with something, some sort of speech or something you're thinking before you take every trade. Write it on your trading view in an anchored note or something. Like, I could lose, and that's okay, or whatever you want to come up with. Ask yourself, how will I respond if this trade loses? Am I going to respond negatively? No. I'm going to respond positively. I've told my friend who suffers from anxiety and some of the stuff and depression a little bit. I told him, you're not depressed. You're not anxious. Stop telling yourself that. I get that maybe he is, and that's fine. But by telling yourself that, you're succumbing to it. And it's the same thing with people that I know that they go to work or whatever, and like, it's going to be the worst day ever, man. I don't want to go to work. Oh, it's so bad. Life sucks. Why would you think that? Then it obviously is going to be bad. Unless like something amazing happens, it's going to be bad. So don't even think about it. That's my thing. Don't even think about it. And if you're going to think about it, think about the worst case scenario, and then understand that could happen, especially with trading. But preparing for the worst, you'll be less emotional when the worst thing happens. That's just the reality. It's still going to suck. It's not going to be fun. But it's at least if you lose, you're like, I knew this could happen, right? A big problem, I think, is these beginner traders, they think they're going to win. Why do they think they're going to win? Well, going back to the online fake trading gurus, where all they do is post their winning trades, and it's like 50 grand trades and BS like that, and probably just using their dad's Lamborghini in their pictures. And all these beginner traders, they go and place a trade, and on a technical level, you're either going to win or you're going to lose. And it's so easy to win, but it's also easier to lose. So they get twisted, they get mixed up, and then they get very emotional when they lose, and they take it personally. And we have to, again, to retouch on this, journal your losses. After every loss, write down what went wrong. Did I follow my plan? Was this loss within my control? And then this transforms losses into data for improvement, not emotional baggage. So if you have your trading journal, however you like to do it. I used to just do mine in a Discord. I basically made a private Discord group just for myself, and I would just have a section trading journal. I would also have another one for P&L and stuff like that. But I had a trading journal one where I'd take a screenshot, and I would just basically show every trade and journal every trade. Your emotional journaling could be as easy as this. Did I follow my plan? Yes, no. And then if it's yes, there's nothing else you need to write. If it's no, explain why you did not follow your plan. What were you thinking at that time? It's really that simple. So you post your trading screenshot, right? So let's say you're trading the 1 hour chart with the daily higher time frame. Make sure you have both of those screenshots, and then just journal. Did I follow my plan? Yes or no? If not, why? It's really that simple. And then you can go back a year later and be like, wow, so many of my losses are because I did not follow my plan. Let me follow my plan. And then you can also have some self-reflection questions as well. You can ask yourself, did I take unnecessary risk? Did I risk more than 1%? Was the trade aligned with my rules? And if you answer honestly, you will learn from every loss. And then I'm not saying I do this, but you could do this as well. You could spend a few minutes each morning visualizing yourself handling losses calmly. It kind of goes back to asking yourself before every trade, what's the worst case scenario? And then just picture yourself, play it out in your head. You don't have to meditate. You don't have to go on the ground and then hold your 2 circles up with your hands and meditate. But just sit there calmly, close your eyes, visualize yourself losing a trade, placing a trade, then boom, price goes down, stops you out. Picture yourself with the trade closed, journaling it, and moving on without emotional attachment. Picture yourself doing that, and good things will come, in my opinion. And going back to what I was talking about at the start of the show was how I've never had that big loss because I've never really risked more than 1%. That's so vital, and I'm pretty sure the reason that I never had that big risk is back when I first started trading, the first person I really got into on YouTube was a gentleman named Ricky Gutierrez. I'm not going to comment on him now. I think he's reasonable. I don't really watch him anymore. I haven't watched him in many years. But that's who I started to watch at first. And I took something from him that was very, very powerful. The idea of if you are risking more than you want, or let's say you buy a stock or whatever, and you're supposed to get stopped out at this point if you don't have if you don't have an automatic stop. Not only are you going to lose more money if price goes against you, you're tying up capital. So, especially if you're going to risk more than 1%, if you have a $500 account and you're risking like 10% or whatever, and then let's say you buy at $100 a share. I'm just making really simple numbers. Let's say you buy at $100 a share, and your plan was to get stopped out at $95. And then it's $95. You're like, I don't want to close it out because you're emotional. You don't want to admit you're wrong. That's a big issue. It's at $95. Then you don't sell, and then next thing you know, it's at 94, 90. Then you're at 88. Then you're at 80. Then you're in the 70s. Not only are you losing money, which is not good. Not only are you losing more money than you wanted to, but you are also tying up capital. That's the issue. And so then you don't have that capital to trade with anymore. And that kind of resonated with me when I was a young trader or a rookie trader. Where I'm like, okay, yeah, it's not just about how you lose more than you want. You lose more than that 1%. You don't have any. What am I going to trade with, right? And it becomes more difficult. Then let's say on the next trade, let's say you're still holding that loss, and then you take another trade and it's a winner. So let's say you risk 1% on the first trade, it goes against you, you don't get stopped out. Now you're down like 3%, 4%, 5%, 6%, 7%, and then you risk 1% on your new account balance on the next trade, and you win. You make your 5-1. That 5-1 is going to be significantly less money because you're in drawdown on your other trade, which makes your overall count less. So you're losing. So you're not making as much when you win. Think about that. Think about different ways of why you should not risk more than you should, or why you should just stop out. I wouldn't even take a trade with a manual stop loss ever. You have to have a hard stop on every trade, in my opinion. No questions asked. Unless if you're somebody like me, I can personally manually stop out now because I understand it and I'm an experienced trader. But if you're new, you definitely have to have a hard stop that's in the market that will stop you without you even thinking about it. And a good example of this is of how when like I said, hopefully that resonates with you guys, of understanding if you're down 5% when you only should have been down 1%, that's your overall account balance going down. So then when you have the next trade and it's a winner, you're not winning as much. That's a big thing with when I play poker. A lot of the guys, like let's say you buy in for I don't know, I'm just going to use the casino, my local casino, $200 buy-in. And then let's say you're down to like $50 stack or $100 stack. You're down to $100. If you get pocket aces or you get a really big hand, you're not going to make as much. That's why I always believe in topping up your stack. I know this is about poker, not trading, but topping up, because you could get a big hand and like, boo-hoo, wow, now you doubled up, but you could have doubled up with $200 instead of 50 or 100. It's a big difference. So that's why I always encourage people who are playing poker to always keep buying on. Now, I will say if I buy in for $200 and I lose a $20 hand, I'm not going to re-top up. I still got $180. But, when I get down to that 150 or lower, okay, then I'm topping up. That's why when I go to the casino, I basically bring like 3 buy-ins and then like an extra couple buy-ins just for topping up, right? So like I'll bring 3 buy-ins as if I $200 lost, $200 lost, $200 lost, and then like an extra $200-$300 to use that money to top up in case things go bad and I lose a couple small hands. I have money to top up so that when I win, I can win big, right? That's important. So hopefully you guys are learning some little tips and tricks here. And like I said, it's all about those little tips. If you have problems drinking, don't go to the bar. If you have problems where you don't want to accept your loss and you don't want to sell your loss, have a hard stop in place. And again, no questions asked. If you're listening to this podcast, you better have a hard stop in place. Every trade you have better have an entry, obviously, and a stop loss. No questions asked, and especially if you are a beginner trader, guys. It's so important. So remember, guys, the losses are inevitable, but they do not define you. They do not define your strategy. And like, it's such a funny thing where if you just tell somebody, "Oh, I'm a forex trader. I've lost the last 6 trades in a row," people are going to look at you like you're crazy, and they don't really understand. But you do. I do. The people who are real traders, they understand that. And we can only focus on what you can control. That's a huge Stoic philosophy principle. We can focus on our process, our risk, and our mindset. Those are the 3 things we can focus on. Sticking to your plan, sticking to your 1% risk, or again, if you've journaled your trades, maybe you know when to risk more or when to risk less. Stick to that risk, and then stick to understanding your mindset. And then whether you want to meditate in the morning on it or just listen to this podcast and just understand it, it's very, very important. Epictetus said, "It's not what happens to you, but it's how you react to it that matters." Let this guide you in trading and in life as well, right? The whole reason we are traders and want to become traders is to have a good life. It's not just about the number on the screen. It's about freedom. And trust me, as somebody who has struggled with anger my entire life, and do I get angry still? Yes. I mean, I just got into a fight the other day, but again, the guy slashed me in the knee. It's, I don't know, it hurt. So I reacted, right? Like if I stub my toe on the couch leg, I'm gonna scream. It's difficult not to, right? But then it's about not getting mad after, right? If you want to lose it, if you're gonna lose a trade and you want to be like, damn it, and get mad, it's reasonable, right? You're losing money. It's like a human emotion. But what's going to separate you from the people who get mad, who are the other people who are going to get mad, is snapping right back into it. I've talked about it in the previous podcasts as well. You want to try to have an emotional flat line with only minor spikes up and down. If you win a trade, you want to get a little excited, that's fine, but then immediately go back to sticking to your plan, remaining focused. If you lose a trade, get a little upset, but snap right back into it. When I mean snap right back into it, I'm talking like almost immediately. Like, damn, that sucks. Wish I made that money. Wish I had that trade. I thought it was good. Okay, right back to it. I'm sticking to my plan, looking for the next setup now. Not going to revenge trade. Tell yourself that every time. If it helps you, write down what you're going to say to yourself out loud every time you lose a trade. I'm a firm believer in saying things out loud, and that kind of just, I don't know, there's something to that where you're speaking it into existence, kind of just like where I said where it's going to be a horrible day. No, it's going to be a fantastic day. It's going to be great. This day's going to go by great. It's going to go smooth. Tell yourself those things out loud. And as always, guys, if you want to, learn about supply and demand trading and just learn about, trading techniques in general, you guys know my YouTube channel where I'm sharing, practical trading tips, my weekly Forex forecasts as well. And that's a big thing with the trading forecast is they cannot be faked. I can't upload a forecast a year ago and then I was wrong on a call out on gold or something and then go back and edit that video. It's on YouTube, so it's non-fakeable. Anything can be faked out there. Let me tell you guys that. P&Ls can be faked. That's easy. Live broker logins, that can also be faked. It's pretty easy, not easy as well. I'm not going to get into it, but that can be faked. They could easily just have 2 accounts. So yeah, that's my YouTube channels where you get all the free information. Of course, I have my the membership as well, where we do the daily market breakdown videos, have the video lessons, and if you guys ever want to come on this podcast, discuss trading, whether you are a profitable trader, a break-even trader, or a losing trader, I'd be more than happy to hear you guys and discuss things with you guys and maybe help you out and it can help out the beginner traders that are listening to this podcast as well. So with that being said, I appreciate everyone tuning in. If you have any ideas for podcast topics in the future, please send me a message on Instagram. Email me at fxtelepath@gmail.com with your ideas if you want to join the show, whatever you want to do. Remember, guys, always manage risk. It's very, very important. By risking 1% only, it's going to be very, very difficult to blow your account unless you're always trading economic data releases or something like that. It's going to be extremely difficult to blow your account. And in trading, it's all about staying in the game. Trading isn't a 90-day success rate or even a 1-year success rate. Trading is a multiple year long grind of learning, trading, mastering psychology. And in order to stay in the game for more than a year, you cannot blow your account. You cannot do that. And let's say you have $5,000 you want to risk to trade. Let's say you don't need that $5,000 in your personal life, and you want to make a deposit into a trading account. Deposit the $5,000. Don't just do $500 increments or $1,000 increments. That'll mess with your psychology. So I always recommend putting as much as you can into the account and then risking 1%. Might be a little bit risky, but that's, in my opinion, the best way forward. So anyways, enough of the ranting. I appreciate every single one of you listening to these podcasts. Share the podcast with friends on your social media, other fellow traders who you think can get use out of this. And with that being said, I will see you guys in the next one. Have a wonderful day.